We're back. We're back. I think we're good now. We'll see. You never know. So we'll wait for stream to populate here, and then we'll get jamming on all of this. Alrighty, so where were we? Alright, so really the story is market pulls back, goes to support. Alright, and that's really all built off of data today. So we'll see here. Well, actually, I don't need to scroll screens anymore. We're looking at the volatility index. Alright. We can see a couple days back, right, the VIX goes negative. So on Friday, did I stream Friday? I think I did. So I streamed Friday. We talked about how the market was going into a buy signal. You should be long, all this stuff, right? So on Friday, we recommended that you should be long bias the market, mainly because the market was going positive and because the VIX had gone negative. So you can see over the past couple days from Friday into Monday, the market on the VIX was negative. So market on VIX, volatility retreats, market goes up. Then we come into Tuesday. Tuesday being today. All right, market pulls back off of data. As a result, the volatility index breaks up over the 15-minute trend. When we break the 15-minute trend, that's normally kind of an early precursor that volatility is starting, okay? Once the 15-minute trend breaks out, we then look for the market on the volatility index to go to the 30-minute trend, which is, one second, which is right here. All right, so I'm going to bring up a pre-market chart here in just a second. Come on. Come on. There you go. I don't know why you did that. It didn't make any sense, but okay. So here we are looking at a 1-minute extended trading hours chart. All right. When the 15-minute 50 SMA breaks out on the VIX, we look to the 30-minute 50 SMA. All right. So this right here is 15-min 50 SMA breakout. All right. Then this guy here is the 30-min 50 SMA target of 15-min 50 SMA breakout. Breakout. All right. So basically, once the 15-minute breaks out, you look up to the 30-minute. 15-minute being an early precursor for volatility. 30-minute being kind of the true one. So ultimately, what do we have here today? Market opens up, data comes out, data breaks the market down. As a result, the 15-minute goes positive, volatility increases. We go for the 30-minute target, which is all the way up to about $17 on the VIX. As a result, the market gets thrown down. All right. So those are the rules of the VIX. Those are a couple rules of the VIX. So remember that. When the 15-minute breaks out, we go to the 30-minute, generally. All right. What is the other rule? The other rule is when the 30-minute volatility index breaks out, or at least attempts a breakout, kind of like you saw today. You see how it broke out, kind of pulled back, and you got to move over, right? So if I zoom in a bit, this whole move up here, that's a move up and over the 30-minute volatility trend. When the VIX does a move over the 30-minute volatility trend, the rule is a lot of times that will allow the market to target the 30-minute SPY trend. All right. I know these are a lot of different rules, but that's just the way it is. All right. So we're going to go back down to this chart here. We're going to flip it to a 30-minute, and we're going to bring up the SPY. And I'm going to delete all this stuff off real quick. All right. So remember, 15-minute VIX takes the VIX to 30-minute. All right. When the 30-minute VIX breaks out, it takes the SPY to its 30-minute. All right. So you see right here how the market went down to the 30-minute 50 SMA and we bounced the market. That was because we broke out the 30. It's not because we broke out the 30-minute. I mean, you can see all day long the market's going down. So clearly from the open, the market sells off and it goes down to the 30-minute trend. Right? Okay. The point being is that did you know that all day it was going to sell off right down to that level? I mean, maybe you had a plan for that to happen. Maybe you didn't. I didn't. But one of the rules that I follow to help me understand that that's where we're going is in a situation like this, where we break out the 30-minute VIX. So if I bring this up, right? So once you break out the 30-minute VIX, a lot of times what's going to happen is the market's going to target its 30-minute 50 SMA support. All right. So yeah, that pretty much happened. And then that's where we recommended a bounce in the private group. So if we go into the 1 minute now, you will see that's pretty much where we pinpoint bottom the market. So we bounce the market, all right? Which means we're not fully bearish. The market is not fully bearish. Now, someone's going to look at the title of today and go, the stock market's trying to hold support or the market's not fully bearish. And like, what's this guy talking about? The market's been bearish all day. True. The market had a bearish move, but the market has not entered bearish territory yet. Hence why we bounce. All right. If the market gets acceptance below, then maybe the market not maybe. If the market gets acceptance below, then the market actually would turn bearish. But the market is not bearish yet. We really just pulled the market back down to support today. And as long as it's above, the market is still bullish. And, 1 second. I keep scrolling the chart. And the other thing, too, that it would need to happen for the market to stay bullish is you'd want to see the VIX break down. So ultimately, this bounce that we're seeing right now will pick up in steam to the upside if, in fact, this was a false 30-minute VIX breakout. So if this kind of head and shoulders formation comes down to 17 and then breaks down 17, you're going to see the market bounce all the way up. All right. So what's happened? So really all of those, this, that, right? So really what's happened? Data's come out. We've increased volatility. We use the volatility levels that broke out to pull the market down to market support. Now we've bounced market support. Now we're looking and debating if the VIX does not hold the breakout, volatility was wrong, and market will then run again. All right. That's kind of how that's all working. All right. So right now the market just held support. That's all that's happened is we literally just went into a buy move starting on Friday. We led the buy move into Monday. From about midday Monday into Tuesday, we have pulled the market down to support using the breakout on the VIX. The market is now bouncing support. If the breakout on the VIX fails, the market will go, oh, so it's just a pullback, and we'll run the market up. That's pretty much it. I mean, when I say that's pretty much it, I mean, there's a lot to it. But I mean, that's really the story here, guys, is we had a buy signal starting Friday that lasted into Monday. We then used the volatility index into Tuesday to then throw the market into a pullback down to support. And now we're bouncing support using the SPY. And if we can break the VIX back down, then the bounce will continue. Or not go into a sell signal. All right? And, yeah, that's pretty much the story. Now, let's take a peek at Bitcoin. So Bitcoin, we have we have targets. Well, we've had many targets. My last target for Bitcoin was about $103,700, which we missed, unfortunately. That being said, over the past many days, I mean, we've had targets on Bitcoin here, targets up to here. So we pretty much have nailed most of that long target up. And then this morning, and those that were in our chat, those that are in our private chat will know. I mean, I posted on Twitter these targets to the downside. So right now we're looking at Bitcoin going down to these bullseyes right in that area. And this morning pre-market in our private group, pretty much, and not that it was fully right, it's kind of right and it's kind of wrong. We pretty much said, hey guys, we're coming up into the weekly target. We've shied it right now. I would still like to get it, but ultimately, this is where we're going to start looking for the weekly chart to lower high. Granted, it's only Tuesday, so we normally would expect the markets to kind of hold and trade into the weekend, and come Sunday, 8 p.m., we'll most likely look for the rollover. Well, that was wrong because it just basically happened now. And that's okay because the markets can kind of do as they want when they want. But anyways, that being said, our first initial targets of the rollover, which I thought would at least kind of come into the weekend Sunday 8 p.m., the targets of that roll would be here and here to start. So we've pretty much got target 1, and I was off by 5 days, right? Well, it's Tuesday. Yeah, so I was off by 4 or 5 days or whatever as well. Tuesday to Sunday, you get the point. So yeah, 5 days. So yeah, I was off by 5 days on the resistance roll, but we are correct in the desired destinations of the roll. So you can see how your analysis can be right and wrong at the same time, right? So I thought we would get up to about 1,375. And there's also levels right here that I can use as targets, but I just wasn't using them this time around. So kind of a mental note for next time around for myself. So yeah, Bitcoin, our target was here, 103,700. The targets for so this was our long target. Long targets become resistance, and the resistance target would be down to here. And so we've pretty much achieved that today, all in a day. Did I know that was going to happen? No. But were the targets accurate for the downside? Pretty much. We haven't hit the lower one, and we've kind of shied the first one a little bit, but all good. Yeah, so that's that. That's Bitcoin. Not a whole lot more to say. Yep, I use pretty much every single time frame for plays. I use daily charts, weekly charts, 4-hour charts, 30-minute charts, 1-minute charts, 5-minute charts. Yep, I use all of them. Yeah, so keep it simple. Exactly, Justin. Keep it simple. There's a lot of nuances to it that help you kind of understand more in real time. But yeah, you're right. The reality is of the market, we just basically went into a buy signal, and then we used the VIX buy signal to pull the market back down to support. That was it. You know. And then you can track all the levels in between so you kind of know it's breaking in real time. But yeah, I mean, that's really the story. Didn't look at a bull flag, didn't look at a bear flag, didn't look at a head and shoulders, didn't look left and use previous low bounces for support and when this, no, none of that. Just market's positive, VIX went positive, market pulls back to support. That's all that's happened over the past couple days, really. Oh. Yeah. Your stream's selling me on car insurance now. Why would it be selling you on car insurance? That's interesting. So yeah, I mean, that's about it. Now, we will, like I said, I only got till about 12 o'clock today as far as streaming goes, and then got to run. Like I said, I'm kind of trying to get everything done on this rental property in a quick manner. Like I said, I'm remodeling the laundry room, redid the kitchen floor, redid the foyer floor, and then there's some old doors in the house that I'm changing to new doors, so it's all kind of uniform. And then a couple other little random things thrown in there. But yeah, that's pretty much all that's going on right now. So, So yeah, like I said, you know, every day that it's not done, then obviously it wouldn't be rented and so on and so forth, and the costs go up. So, you know, just popping over there and working as the days go on. So give me a second here, because we're probably going to go back down to 590.52 here. Let me just double check. Yeah, I think it's not the greatest setup, but we've pretty much taken out support here at 59228. So we could be looking at a reset down to back down to the 50 SMA, which is right about there. All right, let me just double check that. Yeah. So it could be looking at a nice target down to here. And then the flip side of that is that the micro trend lower high is going to be, sorry, here. 1 second, I'm getting this all set up. So pretty much we'll look for a move down to the bullseye. And in the more micro term, the kind of bounce to potential 1 minute lower high is going to be this box on the upside. So it just kind of is what it is. So you kind of have a target back to here. And then if the market truly gives up the bounce and we revert back to the 50 SMA, we'll head down here. So that's assuming that like this bounce. So we have this bounce in the market, right? If this bounce, if the bounce off the 50 SMA is, you know, illegitimate, right? Then obviously there's a good chance you go back to the 50 SMA, which is down there, all right? There's a couple other things that I'm watching. I should actually track the 5 minute there. Yeah, it might be a little too soon for that, but anyways. So this is our micro bounce target, somewhere up here, and if we're lucky and we get a full-fledged move back to lows, and you're going to go to here. All right, so that's your micro long back here. So if you're, you know, this would be your scalp long, right, back up. Whoop, let's move that. Damn it, Connor, you suck. I wouldn't say you suck, you're actually pretty good, but this freaking trading views just wants to be dumb. Oh my goodness, how did that happen? That's weird. And the other thing too is this would be this target is harder than obviously this target, right? Because obviously you got to reset more price action to go down here and yada 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 yada. But see how you can have an idea. So this is the whole point of this is, you know, yes, there's maybe a reason to go here, but there's also a reason to go here. So if you're so one-sided, one-directional, right? If you're only looking at things in one direction, then something like this is going to happen to you. So you could have been, you know, say someone's like, oh, it's going to break back down, so I'm going to short this, right? But then it's like, well, we still got to go back up to here, right? So there's my one, there would be the 1 minute long target completion. Boom, done. All right, cool. So now look at, ready? Now this goes away. That's done. All right. And now what are we going to do? Now we're going to go like this. Now we're going to go to this low, and we're going to repeat the process. All right, so at some point, and I got to check the VIX. Hold on 1 second. Actually, I should just move the VIX back up to where it's supposed to be so I can keep track on it. So the VIX still hasn't broken down. That's okay. Wait. 1530. Yeah. Okay. Let me just make sure I'm not missing anything here. I could be. Like I said, the market is still over support, you know, and this target down here is if the bounce fails, which clearly it's not failing yet. Let me track here. Debatable. Don't really know how I feel about that one yet. That's an interesting candle. But yeah, now our pullback target's going to be somewhere about here. Right? So now this would get updated to like right here. And actually maybe even a little higher because this is a pretty strong 1 minute candle. So So now we're going to look for a pullback down into there. No, not a new rental, same rental. Just some tenants moved out. They kind of damaged some things, and while I was in there fixing what they, screwed up, I'm like, well, I might as well just do this here while I'm at it. So. That's weird. How did that just happen? Whoa! What? What just happened? I don't understand. I'm confused. What is going on? Why is it going down? I don't know. I just blew my account. Oh no. Alright, that's completed. Done. Also, I'll still keep this bullseye down there just because, So this will be this is going to be the target if the market falls apart, right? So if the market doesn't remain, positive or whatever, falls apart, we're just going to look back down to there. In the meantime, the only way that's probably going to happen. Wait. Yeah. The market can only go down there if the VIX continues kind of pressing and blah, 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 blah. Not entirely true, but you get the point. And then for kind of when the market can really boost up, and also, yeah, anyways, you get the point. And so if the market's going to boost up into more of a long press, ideally we would want to see the VIX break back down the 30-minute. So if at any point the VIX gives up, like we said before, oh, I moved this chart like a dummy, sorry. Yeah, if any point the VIX breaks down this $17 price, 16.90, 17, that's where we'll actually look for the markets to kind of continue this boost to the upside. If the VIX doesn't end up breaking down, yeah, if the VIX doesn't end up breaking down, we will probably look for the market to reset down to here. If not, one second. Let me get there. Everyone just hold your horses to here. So this is going to be our target on kind of the continued drop. And if, yeah. So this zone on the downside right here. So this would be like this yellow box on the downside. That's going to be our target roll right now as long as the VIX continues doing what it's doing, which is holding up. Right? So, yeah. So right now we might, it depends, we might be looking at right about there now. Might be a little too soon for that. Again, market's getting a little choppy, but you get the point. So for this little guy here, we could arguably be looking down now into 59178, but we're going to need this this higher low on the 1 minute micro to fail. So there's still 1 minute micro support right where we're at. If we fail that, we're going to drop out down to this bullseye here. So arguably, we fail here, we go here, right? That's the next thing. So that's kind of, yeah, you get the point. Vice versa. There is a vice versa here. Sorry, I mean I just don't, I don't want to give people over confuse people, but let's see. Low, high. And this would be the other guy. So when price action starts to get like this, there's a lot of different levels. So it's like if 1 minute micro holds and boosts up, then we're gonna hit this guy on the top right here. So there's kind of your breakdown. And I know it kind of sounds silly, but then again, it's like once the market starts ping-ponging, it creates so many different little supply, demand, and this is what your chart, this is what it ends up doing, right? it's no longer just like trend down or trend up. Once you start going up, down, up, down, up, down, up, down, up, down, you create supply, demand, supply, demand, supply, demand, supply, demand. So then it becomes, you have this sort of scenario. And it just kind of is what it is. It's just the market, right? It is what it is. This is what it is. And then also, I didn't want to, again, you see this red candle in here? Ready? This is just the previous lower high, right? So you see that? So this market went down, hits 1 minute support, bounce, then it lower highs the 1 minute down, and so its first backtrack is to right here, which is obviously 1 minute trend, etc. If this little 1 minute sequence down fails, blows up, then again you'd be looking up to here. So all these yellow boxes are obviously supply, demands, etc., etc. It's going to come back up. No. So you see how, again, you see that, right? You see how it bounced up, resistance, down, etc. Now, literally, it's funny because now this candle's going to pull back to right here. Wait, hold on. It's just this price action is getting kind of wonky here. Yeah, so now it's like right to here would be there. So that's kind of the next supply or demand. Sorry. So now you have the market trapped right here. So the 1 minute micro chart right now, the volume is trapped in between here, here, and here. And so we break out. Generally, we would go up to here, etc. So that's where that volume trap is at. So those that are stuck in the micro scale, that's where they're trapped at, right? So now this would get removed because we took them out. What's the VIX doing? VIX ain't. VIX had a little bit of a red candle there, and yada yada yada. Oh, only see. Oh man, I suck. Sorry guys. Yeah, you get the point. Whatever. No big deal. I'll keep it on this chart now because obviously it's where I'm doing all the jam at. But you get the point. $11:48. We have 12 minutes. Come on, people that control the market. Do something cool for us. Let's run it all the way down to 591 to 590.59. Let's make the stream cool before I have to go in 12 minutes. Yeah. 11 minutes. So again, you see this target on the downside right here, this one that's close by at 591.74. The objective to get to here is to flush out the 1 minute trend. So this is all 1 minute. You see how you had this little bottom here? That was on the 1 minute. So if we take out the 1 minute micro trend, you flush down here. That would be the next up, which it's really not that much. I mean, this is 590.22. Well, it's about 30 cents. All right, about 30 cents. The FANG just started putting in a little bit of red. I don't know if it's going to be enough to trigger the move yet. Again, things are moving slow right now, so I'm not really expecting anything. But again, the FANG just gave us a little red, so if we can get a little more follow-through of red on the FANG, we should go get that bullseye. Go on, darling. Come on. Oh, it might have updated slightly. Let's just double check. It did. Sorry. I have to move this just a little higher. Boom. There it is. Doink. Job well done, folks. Job well done. So you see how it was like the FANG's starting to get a little red? I'm going to bring this over. Ready? So watch this. So in the real time, I could see these last two see how the FANG, 3 red candles in a row. Now it does, I know that's not much. When you're looking at this chart, you go, well, 3 red candles, that's 3 red candles across all of your biggest market cap stock. So that's a lot, right? It's not a lot. I mean, but it's not little, right? That's not minuscule. That's 3 red candles in a row across all of your major market cap stocks. I mean, that they could have cumulatively, they could have maybe decreased billions in market cap just across those 3 red candles, right? So just those 3 red candles right there across all of your major market cap stocks, you know, was what helped create this 30-40. Well, that was 59228 to 59160 is like 60, 70. So we're getting to either way. You see what I'm saying? So to move the stock market, the SPY, by a few $1 million, or more like a couple $100 million down, we needed to decrease the market cap across all those big names. And now we're probably going to go, like I said, get our lower destination target, which is going to start right about 590.57. So maybe down another, what do we got? 591.17. So maybe another 20, maybe like 20, 30 cents down here. Arguably, I don't know, 70 cents. If the market plays nice. So ultimately, as long as these FANG, which are, hold on, that's not what we want to do. Hold on, sorry. Let me bring this over like this, and then I'm going to bring this guy. Wait, where'd it go? That's weird. Oh, there it is. So as long as the FANG play nice, arguably, we'll go down and get that lower destination, which is right there. We'll take this guy off. And then we also got to clean this up a little bit for everybody. Hold on one second. We're going to take this guy. We're going to move that there. And then we're going to take this guy. Settings, low, high, boom. And we're going to track this breakdown right there. So if we need a 1 minute micro retrace in between going to the lower destination, we might be looking at a retrace up into 592 prior. But ultimately, as long as the FANG play nice here and stay red, we're going to go get that bullseye on the downside more likely than not. So you see how the FANG are still red? So again, it's hard to bounce the market, even micro bounces when your FANG are staying red, right? Because your biggest market cap players that create the price action of your indices is red. So, yeah. There's another red. So look at, zoom in a bit. Starting to give a little green. It's all right. Momentum still downsided. Mason, I don't know. To be honest, I don't really read any trading books anymore. I really don't. I really don't know, to be honest. I've learned most from just sitting in front of the screen and learning things myself personally. And a lot of the materials and books are going to be a regurgitation of other materials and other books. Kind of like social media these days too, you know. Especially the one that gets me these days is like, don't wake up in the morning and look directly at your phone. Take a second, relax, you know, think about what's going on for the day. That became a very popular saying, and it became viral. So now it's become viral, it's become a teaching, and now it's become a teaching. More people make the videos about it, et cetera, et cetera, et cetera. So like a regurgitation of information there. And that's the way I see a lot of trading books these days. So I don't even really read anything trading book related anymore. Hell, I don't even really look at any stock market material these days. Whether it be YouTube, Twitter, anytime I see somebody else's, I don't want to say that's entirely true. I look at some stuff, but I really don't look at much like Twitter or YouTube, anything trading related today. I really could care less. I just stick with what I do, follow with what I do, and that's pretty much it. So I really am not the best person to ask that question because I have no clue. Once you get so stuck in your ways, you're just kind of stuck in your ways. And that's kind of where I'm at these days, to a degree. No, I would say the FANG, wait, hold on. Which comes first? But Connor, what comes first, the chicken or the egg? Because sometimes the SPY moves if any. Yeah, I mean, not really. Yes and no. I would say more often than not, it's again, your underlying equities are what drive the market. That being said, when the SPY goes into a sell signal, then yes, equities are going to start performing more bearish. So I would say when the SPY transitions to positive and negative, that's when the effect would go focus on the SPY because that's going to start driving equities. But the equities have to drive the market to that point first. So it's kind of like equities drive the market, and then once the market goes into a buy or sell signal, that will start triggering more selling or more buying into equities themselves. But the reality is it's the equities do drive the market. SPY, you could say that there is some sentiment there where it's like, oh, the market's really bullish, so I'm going to go buy equities. So it could be kind of like a self-revolving, or like sort of a what do they call it? The self-fulfilling prophecy type jam. But the reality is the SPY and the NASDAQ and all this indices stuff, they are a reflection of what's happening in the equities market. So if you were to say what comes first, it's really equities drive the indices. But you can also argue, which is true, that there's a sentiment to it, which when the market is performing really bullishly or bearishly, it's going to cause a psychological effect where people start to then sell the equities more or buy the equities more, which then further drives the SPY down, which further drives the SPY up. But it does start on the equity side. I don't even have a favorite trader. Well, obviously Qual Maggie would probably be the one. I would have loved to hit his number. So Qual Maggie, but I guess you could argue he's kind of famous. Or the who's the crypto guy that made like billions off of nothing? I forget his name. I can't remember his name, but he's somewhere on Twitter. I've seen his posts I've seen like posts about him a couple times. There's a guy who turned like a couple thousand into billions with like meme coins or something on crypto. I forget his name, but that would be another one. So on and so forth. But yeah, like when you ask me like trading books, and I don't mean to sound kind of like a douche about it, but yeah, I really don't look at anything trading related anymore, because once you learn your system and you learn the way you like to maneuver in the market, you just don't even pay attention to what other people say. Right? Like or the news. Like, not that I don't pay attention to news, but that's another thing. Like this whole think about since we've been on stream. Think about all the little targets and how the price action would move and where we were going to go and all the bullseyes. I didn't really learn that from any other trader but myself. Specifically, what you were seeing here was all done by myself. I didn't look at any of the news within the past hour to dictate how we would do that. I did not check anyone's Twitter for conviction that I would be right or wrong about what I was thinking. That was just all my own brain and really just sitting in front of a chart for too damn long. So, yeah. Yeah. Bitcoin's tanking at the same time as the SPY. Yeah, I mean, it's just probably going down to our targets, which are right here and here. Right, so those are our current Bitcoin targets. If you ask me, it's just pretty much going to where it's just going there. But yeah, they sometimes move hand in hand. There is at times some correlation, and then there's other times not correlation. So, oh, by the way, the market's going to bounce a little bit here. I mean, it already kind of happened. Sorry. But you can see, see the FANG? So you got a couple green, so you're starting to go a little green. So then obviously if you go look at the market, what's the market doing? Market's probably getting a little green. Also probably because it hit our bullseye. So, yep. And then where's it going to go? It's going to backtrack the 1 minute micro. So the target of that bounce is pretty much where we already were anchored. See how those green lines are all right there? So we're effectively taking this little micro bounce up and then just kind of screwing with the previous sell trend there. That's it. Yeah, I always keep saying I'm going to update that, but I just get so damn busy. And well, it's only because of I mean, I really planned on like sitting down and doing it as of recent, and then I got kind of busy with this remodel stuff. The prop firm stuff, I mean, again, I've seen so much good and so much bad. I've seen people get denied payouts constantly. I've seen influencers get paid out because the influencers drive the customer base to prop firms. So you have to make the influencers online look good. If you deny the influencers that have big influence the payouts like they do many, many people, then the likelihood that new customers would come to the prop firms would decrease. So it's in the best interest of the prop firms to make sure the influencers with bigger followings or a good following get paid out, so that they can make a video about the payout that will then further drive customers to the prop firms. So there's kind of a love-hate there for me with that. But yeah, and then yeah, so I don't know. It's just, I don't know, dude. Once you've been in the game for so long, you just kind of understand how it all works, and like I saw someone I think I saw a Twitter post about someone getting paid out $1 million or something on it, and then like Brandon, my business partner, they denied him like, I don't know, I think it was like 60 or 70 grand. Like what happened was, Brandon got denied, I think, like 60 or 70K in payouts. We're like, well, let's put you on a live account, right? So instead of, so we're going to put you on a live account. We're going to give you money, you trade, and then we'll take a cut on the payout. And he's like, but I just saw some other guy get paid out $1 million on a prop firm. So why do you want to, or on the prop account or the demo account? So like, why are you going to put me live when you just paid out another guy $1 million? So there's just a lot of odd stuff going on there. So I could care less about that. Like I said, I'm really just here to teach, show you guys what's up. That's pretty much it. So again, take it for what it's worth. If you guys like what I show, that's great. If you make money from it, that's great. That's really my whole objective. These days, it's less about me, honestly, growing big popularity or doing challenges and things like that. All right, what time? We're about 12 o'clock. Yeah, gotta run, unfortunately, so maybe we go into a sell signal, guys. You got to keep tabs on it. The SPX is probably already getting below its 50 SMA just a little bit, but don't, again, it's debatable whether or not this is going to work or not. We kind of need to get a true drop below it, something of that degree. So the market's still flirting with it, but the market is on edge right now, because obviously if the market wants to trigger a sell move, it will trigger a sell move, and then the market will be downsided below the 50 SMA here. So again, once the market gets below 593, well, it already is below that, but you get the point. So you're right at the over-under on SPX. You're right at the over-under with SPY. Let me check QQQ. I mean, everything is flirting with that potential breakdown. So you got to be a little careful. If the market starts to bounce, then it bounces. If it breaks down, it's fine. For me, it's less about predicting whether or not it's going to break down or bounce. That's not true. But like in this situation, I would just wait for it to make a move one way or the other, and then I would just deploy tactics up or down, which you've already seen me do many times, right? So real quick before I go, let's say it bounces. Right, so if we pick up, it starts bouncing, then I'll just start anchoring 1 minute and 5 minutes up, and then you just look for bounces on the 1 minute and 5 minutes up. Right? If the market breaks down, right, then you just start deploying 1 minute stuff to the downside, and as long as it's below, you stay down, right? And then eventually one day it's going to reverse. And so that's pretty much it. Everyone take care, have a great day, and I will catch you back on a stream tomorrow for about an hour or so, and we'll go from there. Oh. All right, take care. Have a good day.